when we kind of get a little bit more granular, we'll look at like clinical payroll as a percentage of operating revenue. We want that to be usually like below 50%. And that indicates that like staffing costs actually align with those reimbursement levels. To answer your question around like reimbursement rates, every business is different. Everyone operates in different states. They offer different services, and they obviously have like different funding sources. So different payers, whether that's Medicaid, whether that's commercial payers. So it's kind of like taking this principle and applying it to each individual business, understanding what that payer mix is, where you're located geographically will have an impact on like what actually that payroll amount is, so what the salaries are, not just aggregate payroll. And then the other thing that I'd say is like administrative payroll as well, just making sure that your administrative payroll as a percentage of overall expense is also in line, so you're not kind of bleeding some extra cash there. And it's really just kind of, we say, peel the onion, and it's like looking at every single dollar in, dollar out, and providing context to that based on the area that you're in, the payers that you work with today. And that gives us a really clear picture as to like how to improve the business, or where there are, maybe areas that can't be improved, but maybe you can do other things to kind of, help subsidize maybe like that lack of reimbursement rate from Medicaid as an example.